cut off, so you can
Yeah.
make over a period of time. Yeah, whatever
I
doesn't
don't. I
matter.
don't think I subscribe to that. Let's talk about the
Whatever
winnings.
you subscribe, okay, whatever
If
you
you
want.
have a position that you're winning 100% or 50% or 80%, um, that's not a sign to get out. That's a sign that you're doing well. What you can do, you can put a stop. I like to put stops.
Right.
So
Trailing
say,
stop, they call it.
well, I never use a trailing stop, but just a stop that is lasts for like 6 months. So say you get in
It moves with the
GM.
stock, doesn't matter exactly.
I have a stop at GM at I had to move it down, but I had 510 for the longest time. So if you short a stock at 5 and it goes to 3, you made the $2. You want to protect some of the profit, so you put the stop like say like 440. That way you get 60, you get 70 cents profit guaranteed, pretty much guaranteed. Nothing's guaranteed, but so that's the stop. So now it looks like it's going to move below $3 because they're not going to give GM any money that they were asking for. So maybe it'll go to 2. So when it goes to 2, you can move it's called a buy stop. You can move it to 310, and then if it goes below 2, this is it goes to 150. You can move the buy stop to 250 like that. So the point is, you're not trying to get out of the position. You're letting the winners run. You get out when you're losing money. That's when you get out. You don't really ever stop a losing position except by a stop. You can say if I make 25% I get out. You can say I make 50% you get out. But what's to say that you can't make 2,500%? See, I think I can make 2,500% in a position. So let it happen. I won't have to get out. If someone bought Google at $90 and they have a rule, oh, I'm going to get out at 25%. So I'm going to get out at 106. Let's get out. Let's take the profit and run. Well, that's okay. But as you can see, Google went to 700. So in that sense, uh, they missed out on the big move. So you stay in Google. So if Google was 90 and it went to 106, I wouldn't get out. I would move my stop to 99. Then if it moved to 130, I'd move my stop to 110. See? Then if it moves to 190, I'd move my stop to 170. Then if it moved to 290, but it was volatile, I'd move my stop to 205. Then if it moved to 300, but it was volatile, I'd move my stop to 210. Then if it moved to 400, 500, 600, I have my stop like 150 below. See? So I never really want to sell it. But if you look at if the top is 700 and I had my stop at 550, I would have been okay. I would have been very okay getting out. And then the technicals confirm that it kept going down. So once it hit 700, it kept going down 500, 400, and now it's 300. And now we think, well, now we think it can break below 300 and go into the 200s. So now we're going to reverse the stop, and we're gonna short it, and we can put a buy stop, and that's one way to go.
Okay, now you say
The technical wise.